home prices might be starting to firm up and, dare we say, rise again. Joining me to explain is Andy Walden, Black Knight's VPs of Enterprise Research. Andy, it's good to see you again. Welcome.
Good to see you, Kelly.
You warned months ago this may be coming. You think it's starting to happen?
It definitely is. If you look at our Black Knight home price index for the month of May, you saw the fifth consecutive gain. You saw home price growth equivalent to 8.9% if we saw that for a 12-month span. So yeah, absolutely, we're starting to see a shift, and it's gone from firming to heating out there in the market.
Explain that a little bit. Give us the numbers.
Yeah, so it's 0.1% year over year, so effectively flat from the same time last year. But if you look at seasonally adjusted month over month changes, it's up 0.7% in May. That's effectively what we've seen over the last 3 months. And if you saw that type of growth for a 12-month period, we'd be talking about home price growth over 8% again here 12 months from now. So, we'll see if that trend continues to hold as strong as it has been over the last couple of months, but certainly some signs of reheating.
So basically, if we sustain the recent price increases that you guys are tracking, and if it shows up in the Case-Shiller or FHFA or whatever, and if we sustain that pace, we could be talking about an 8% increase in home prices over the next 12 months?
Year over year, right? That's what it's equivalent to. Now we'll see what takes place, right? Because we're still seeing this kind of odd position where we're seeing very weak demand out there. If you look at where it was in early July, we're still 35% below where we traditionally would be in terms of purchase rate lock volume in our Optimal Blue platform. So still weak demand out there in the market, but again, we're still 50% short on inventory. So when weak demand runs up against even weaker supply, you see prices firm and heat up, and that's exactly what we're seeing.
Yeah, and again, there's probably a lot of new homeowners out there going, okay, well, at least I didn't buy and immediately find myself 20% underwater.
Right.
But if you haven't bought yet, you're going, okay, this picture keeps getting worse.
Yeah, folks that haven't bought are just, they continue to get hit with blow after blow after blow. I mean, we saw home affordability hit a 37-year low last October. It just reset that low in July of this year while home prices are firming up. And so you just really can't catch a break for those folks that are out there shopping and trying to get into the market.
And I have to imagine if we're trying to unlock inventory to normalize the market, this is now a double whammy because no one wants to move and pay a higher mortgage rate. No one wants to move and pay rising and elevated home prices either. If prices crash because of rates and we're down 30%, people might go, you know what, I can find a bargain. But that doesn't sound like it's the case right now.
Yeah, exactly. And you're still seeing that, right? Existing homeowners unwilling to sell. We saw a 28% deficit in terms of existing homeowners listing their homes for sale. And that's kind of been the story so far throughout 2023. So those folks still locked in. You still have 2/3 of folks that have a rate 3 percentage points below what they can get today. And so you're not seeing those folks budge at all. Now you are seeing, despite the June pullback that Diana was talking about, broadly speaking, if you look at new construction, you're seeing some relatively good numbers. You're still seeing some decent supply there in terms of homes under construction, but those existing sellers that are that lifeblood just simply aren't moving.
So final question, because I've seen some more color on, Twitter and places like that about how there are price declines, especially out west in areas like that. How even are the home price increases that you're tracking?
So it really depends on the way that you look at it, right? If you look year over year, where we are in May, June of this year compared to last year, absolutely prices are down in the West, right? In a number of markets across the country. If you look at the reheating, right, San Jose is a great example of this. San Jose lost 10% of its value last year faster than any market ever has.
Wow.
They were the second in terms of month over month price growth in May. And so you're seeing some of those markets that had been seeing massive declines. They're still down from their peak in the West, but you're starting to see them pick back up. But there are 27 of the 50 largest markets that are now pushing new highs this spring in terms of prices, and they're primarily in the Midwest and upper Northeast.
Wow, fascinating. Again, I don't think we really have let this sink in yet, especially if it does continue. Just extraordinary. Andy, thanks for bringing it to us. We appreciate it.